All right, what's going on, everybody? Welcome back to another live stream here. Joined, as always, by Simple Jack, aka the Chartman Andrew. Jan is not with us today. He's back home for a little holiday cheer. Apparently had a little too much holiday cheer last night, so he's resting up today. Get well soon, soldier. Merry Christmas and happy holidays to all to celebrate. We're coming up on that time real quick. I think we'll probably have one or two more live streams here before take a little break around Christmas and New Year's coming up here. But yeah, thanks for tuning in, everybody. The market is kind of a little slow as predicted here around this time of year. Probably see some fireworks a little closer to do like Christmas, New Year's, and it's got big expectations for Q1. But I'll go over some charts as always today, and then we're going to cover some news stories. Got some great macro stuff going on. Once again, another bullish week of macro news. I don't know how many more weeks of sustained. It's been like 6 months of sustained nothing but bullish macro news, and the charts just not participating. It's got to catch up at some point. So high hopes for that.
I'm hoping. It's taking forever.
It is, but as frustrating as that is, I cannot. I've been saying this since we started doing these live streams almost a year ago now. The longer it takes us to get to the FOMO period, to get to the parabolic period, like the more parabolic and the longer that has to go. So it sucks as much. I didn't think it was going to take this long, but damn. No. I mean, if we got to wait till into Q1, I think the longer we have to wait, the more the market coils up, the more we flush out bad liquidity. The more we have this macro news building up, the more QE and rate cuts start to build up behind us. I think the momentum it really gives us the potential to push into the, some of the crazy estimates up into the high 200,000s for Bitcoin and really see an amazing alt run too, yet before this cycle is over. So patience, unfortunately, is the key. I still am a believer that we're going to see an excellent 2026, and in a few short months, hopefully, and certainly a year from now, we'll be looking back at these live streams with big old smiles on our faces and nice big old healthy bags.
Yeah, fingers crossed. Honestly, I keep going from bull to bear every week, just following the charts here, and it's looking pretty nasty again.
Yeah, that's what I got to figure out. I got to figure out at what point do I turn bearish? Like at what point, if it's like Q2 and Bitcoin's still at 80K or down at 60K, like at what point do I call it quits? I gotta figure out for my own strategies going forward. When do I flip to?
Yeah, I think probably wait till the midterms are over. I think after the midterms are over and we see kind of where the market's at, then we'll kind of have a better understanding of like, okay.
Only 11 months.
11 months, huh? Yeah, fuck.
Yep, November next year is when the midterms are, so.
Yeah, man, I feel like we really need to get this QE started. I think that's kind of what most of this market's kind of waiting on right now. We need new liquidity injection. We're not getting that right now. QT did end, which is great, but QE hasn't quite started yet. So until the Fed come out and start saying like, hey, we're going to start, printing money's coming back in. I think this market's a little bit on pause here. And as you can see, the market,
Well, a lot of that liquidity is held up for a number of reasons. One, we still got a Fed that refuses to give us any sort of, real solid confirmation on where they're going. Every single time that they cut rates or there's a new FOMC meeting, Jay Powell comes out and is extreme, just is a nothing burger, just comes out and dovetails everything he says, bookends everything so that no matter what the markets do, you can go either way and be okay with it. Just won't give us any real confident direction where they're going. And we all know that he's done in May at the latest. They're talking about trying to get him out of there earlier. The guys we have coming in are extremely bullish. I just think the market just doesn't have the confidence it needs to make those moves. M2 is at all-time highs. It's like almost $30 trillion in M2, which is absolutely insane. Money markets are what, like 8.5 trillion now. But again, those money markets aren't going to move until we get serious rate cuts to push down. They're still cashing. They're still getting that easy 4 to 5% when rates come down and that easy ROI isn't available, that's when that money is going to start shifting into risk on assets. So we just haven't seen that from, despite everything else in the macro being fairly bullish, until we get the rate cuts seriously ramped up, and get a Fed that's giving us indications to say, hey, yeah, 2026 we're going to have 4 cuts minimum, and we're going to cut a minimum of X number of basis points, or until we get real QE starting, like you mentioned, until we get that confidence in the markets that money is not going to move in. We're not going to have that fresh liquidity, and as we know, retail's been dead for, the only retail action we've seen this entire cycle was really around memes. So,
and even that's like pretty much dead and dried up now.
Oh yeah.
So
I wouldn't hate seeing memes stay dead. I could see some blue chips kicking off again, maybe a little mini meme season, but I don't know, man. I would much rather see utility projects, new launches, fair launches, IDOs, real projects. Even a lot of the blue chip alts like Link Link and Ethereum have so much bullish momentum going behind them. They're getting crazy adoption, from major institutions, banks, on the entire TradFi markets, coming on chain. And Link and Ethereum are poised to be 2 of the biggest winners in that category. And look at the price action falling up. It's just dismal.
I know.
Right?
It's so
how much more bullish? Yeah. How much more bullish momentum can you get and not move?
Yeah, dude, we had a really good TA setup here. The setup was there. You got the reload zone, you got the bullish divergence, you had the oversold condition, and you had a double bottom in price. So, as much as these setups are, probabilities, this one doesn't seem to be working out as good as the ones that kind of worked in the past. We're getting closer and closer to possibly getting stopped out. We still have some breathing room before we lose these lows. So I'm hoping that maybe by next week, just before Christmas, we can get some kind of Christmas rally and at least some kind of consolidation. And then hopefully we don't break these lows. I think losing these lows would be extremely bad. But if we can hold these and we just kind of do something like that, that would be very sexy. So only really time will tell at this point, and just have to wait.
Well, ETH and Link. I obviously don't do much trading anyways. I've got some token, alts and stuff that I buy. I'm looking for a nice little flip, 2, 3, 5x on them or whatever. And if those are ones that I might have to dump if the bear market does indeed come, we don't get a pump here. But Chainlink, Ethereum, those are probably top of my list for long term. Just continue to DCA and buy regardless of price action and hold for long periods.
Yeah, if that's the case, if you're just gonna do DCAs, I would just recommend just doing fib retracements. Look at levels of tops to bottoms of different ranges, and then just trading your fib levels, 0.618, 78.6, 88.6, and then you can just kind of use those fib levels as a guideline of okay, well, what are decent areas of levels of value or interest, as we would say. And so that's kind of how I would look at it. I'm personally just trying to wait for these structures and stuff like that. Even on Aave, for example, waiting for those double bottoms, waiting for the bull divs and whatnot. But even when you have the perfect setup, it doesn't always work, right? So obviously the market conditions right now are a little bit poor, and you can't really push the chain up a hill, as they say. So take it as it comes. Yeah, and then I'm looking at equities, and I look at the stock market, and it's we're pretty much all-time highs. It doesn't make sense for them to aggressively try to start QE. I think QE only really starts when markets crash, and I think realistically the market does need to crash and retrace, and then once we get that big swing to the downside, then I think the Feds will be more inclined to step in and be all right, let's turn the printing press back on. Let's save the economy, yada yada. But as of right now, we're just flirting against top of range here, right? So I don't really see them in a rush. And even Powell said we're not really in a rush to make more rate cuts and blah blah blah. And it's the numbers are looking pretty nasty out there and whatnot. But I think if the job numbers keep coming out bad, then they're probably going to be forced to cut more rates. But we just have to kind of keep monitoring that. So right now, if we look at S&P, we're pretty much right against the short reload zone. This is typically where you're going to see resistance and, area of interest for shorts. As you can see, we are slowly building this double top here, double top structure. Not ideally what you want to see. So the minute we lose this neckline here, we should expect prices to come back much lower. And then we do have this nice big juicy gap that they left behind here, which in my opinion does need to be refilled because this is just a V bottom. V bottoms generally get retested over time. And so, I do think, we have to wait a bit. So monitoring this to see if this starts coming back down this way. If we lose that neckline, we got double tops officially confirmed, which isn't what you want to see. And then it's weird because if you look at NASDAQ is already actually breaking down. So NASDAQ might actually be leading the market down a bit. We came into its reload zone, pretty much failed right up against it, right against the 78.6. Bit of a double top come in, losing the moving averages. And so now I think it's probably just going to play a little bit of back and forth and then ultimately just come right back down, I think. So not the best Christmas. I think we might be expecting a bunch of coals in our Christmas stockings. But who knows? If we're lucky, Santa will come in and save us and give us a nice little gift. And
a little Christmas pump into an early Q1 dump, and then we got the rest of the year to pump.
Yeah. Hopefully we can get some nice price action there.
Yeah.
So
for me, that's one of the. Oh, go ahead.
Oh, I was just gonna say, I think for me right now it's just waiting. I think we're definitely kind of leaning towards more of the bear side here again to the downside, and if we don't get a reversal by tomorrow or by next week before Christmas, then I think it's gonna be a pretty rough start to the New Year's.
Yeah, you mentioned that the QE not wanting to really go into full effect, or the Fed not wanting to put QE into full effect while the markets are still so healthy like this. That's actually been an interesting story I've been reading a bit about on CT the last couple of days, is that this would be one of the first times ever, or at least a very unusual way to start QE when GDP is actually growing and they're doing QE into a growing GDP. Whereas the caveat is though that the GDP is growing due to productivity, not to the job rates. Jobs are still, the job numbers are still bad, but productivity with, automation and AI and all this other stuff is up. So, you're seeing, stock markets, a lot of these top companies, stock market's 8 companies right now, basically holding everything up. And so they're looking at, I don't know if it's unprecedented, but certainly out of the ordinary to be really engaging in strong QE while GDP growth is happening. So it's gonna be interesting next year. I just, I cannot see the current administration letting the markets flounder, while it's an election year, while we have, such a big, you got the Fed, new Fed chair coming in May, election year. They're going to be doing QE. They're going to be pumping the markets. They're going to do whatever they can to make things look good, even if they're not. To at least through November.
Yeah, so maybe we have to wait till quarter 2, quarter 3 then, until we get the new Fed, and then as we get closer to the mid-election. So
I think Q2 is where we start seeing some life, and Q3 gets real exciting.
Yeah, only time will tell at this point. All I know is just have the cash ready. Just be ready, guys. Be prepared.
That's what I'm saying. Yeah. A lot of us are broke right now. We need a little extra. I know as much as it sucks to not see markets pumping right now, if we get the pump in Q2, that gives us another 3 months to start to get some dry powder to invest.
Yeah, exactly. You want to be able to buy the discounted assets. It's nothing worse than just being broke ass at the bottom and being damn it, should have just waited. But yeah, if we look on Bitcoin and ETH here, so we had some decent attempts here. We had the double bottom come in here. It tried to break out a couple times, but unfortunately it just kind of got stomped down. So obviously there's still a lot of selling resistance here for some reason. We had a bullish div. Now we kind of have a bit of a bear div coming back in on the MACD. We were oversold, which was great, and we are in the reload zone. But unfortunately, the market's just kind of rejecting it. So we are getting closer and closer to potentially getting stopped out, right? We still have room, all the way to these bottoms here. Until I lose these lows, I think we'll be okay. The setup is still technically in play, but like I said, like we got kind of like double tops coming in here now. So pointing kind of towards the downside in that sense. But if we're lucky, we can kind of just like consolidate and we just kind of range here for a little bit. What would be good to see is like if we can get onto the other side of this trend line and then form some kind of structure on the other side of this trend line, because then that will give us the confirmation that we are finally breaking out, at least from this little kind of like resistance. But as of right now, it's kind of a bit of a brick wall here. So definitely kind of getting concerned for this little long that we kind of had set up here. We are sitting against right at 78.6. So, maybe we get that, late midweek turnaround. But I'm not betting my horses on that. So
do you have a my go-to Bitcoin TA guy, Crown Crypto Cave, he's expecting sometime in the next couple of weeks here a rebound. He's saying he thinks that we could pump as much as up to his line in the sand is 107K. There I can't remember which. There's one of the EMAs or something around that area that it's coming down to that area, and he's saying if we get up and we break above this and close on the daily above this, then I'll flip bullish. But anything below that, so he's saying we get up to a 20K pump, and he's considering a relief rally, a dead cat bounce, whatever. What's kind of your line in the sand if we start to pump from here? Where are you going to get confident where you're saying, okay, bull market's back on, this is more than just a relief rally, this is a long-term going to be a long-term sustained kind of pump?
So for me, it's like I always like these reload zones, right? 61.8, 78.6. And so if we just do a range from like the initial bottom around 15K here to the top, we're still quite a far away. So it's like this range is like anywhere from like 40 to 60K, it looks like. So if prices eventually do come back into this area and we do start printing, like these weekly W's, because this is on a weekly chart, mind you, like most bottoms are going to come in with these like little W's, right? Like these nice wide W's, like, W's. That's when I'm going to be like, okay, like the trend is shifting. We should expect to see some upside objectives. And like if we can get those within this reload zone, so like around that 60 to 40K, then I think that's a screaming buy in my books. I'll be looking to be, buying pretty heavily in these areas. And then, we've got 200 SMA coming here. We're still pretty far from it, really. I could see this coming up as prices come down, and then we might link up at 70K here. That could be also another point, just because if we look back here, there's a lot of, this was the last kind of like big consolidation that we had before the kind of like big up move. So I think prices is just coming down slowly, slow grind. Probably going to have to like try to take out these lows here. See if it can actually hold, because 38.2s is what we call the first stop. So this is generally where markets are going to come, test and hold and consolidate if we are to trend higher. So if we are lucky, we just kind of like consolidate here, and then if we do get like some kind of double bottoms, some kind of weekly double bottom here, then I would think like, okay, maybe this potentially could be a trend continuation setup back up. But as of right now, I'm not seeing any of those W's right now. We're kind of.
In other words, you're not trusting any rally from here.
Not right now. Yeah, I mean, like I did try to do a little swing trade right on that daily chart. Buying that W there, but it might have been a little bit too aggressive. But it's looking a bit weak again. So we really have to just kind of monitor it and see if we lose those lows. Then we're probably gonna have to go after these lows. And then, we have all this consolidation and support that we're going to have to kind of resolve and see. And then ultimately, like, I want to be in this reload zone, right? Prices are probably going to be a little bit different on whatever exchange you're at. This is just on Binance or whatever. But yeah, like it's around like that 40, 60K is kind of like what I think is the sweet spot. And it might take some time to get there, right? Like prices might go like, rah, 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 right? But eventually, it should technically come back down into that reload zone, because anytime market tops, the market doesn't bottom until it has retraced about 70 to 80% from the peak of the top. And if you go back on every single cycle, it's pretty much done the exact same. And I don't see why it would be different this time, so.
We're going to find out in 2026, baby. Is the 4-year cycle still alive? That's honestly probably the thing. I mean, aside from, making some fat stacks, but that's probably one of the things I'm most excited about seeing in 2026 is the existing market dynamics still in place? Or, if we pump and we see new all-time high in 2026, then it's hard to argue that the 4-year cycle is still intact. So I think,
yeah, I mean, like what I could see is like, even in 2026, like, Benner cycle says 2026 is like your profit taking years, right? That's the years you want to kind of like hop off and whatever. And so like, if we do get this like big rally into 2026 or in 2026, I'm going to be looking to cash out. I don't think that's the beginning of a cycle. I think that's it. That's like your final, like, here's your blow off top, you're done. And then we have to go back and wait till 2028, wait for the next halving event and, let the markets kind of like bottom out again. But, it's hard to predict these kind of things. I don't have a crystal ball, who knows? So just going by the charts here. Ethereum, it's also kind of looking a bit weak here. Ethereum was looking a lot stronger than Bitcoin. Like, we actually did break out like kind of decently. But then, we got some resistance, 38.2s first stops. You had 200 SMAs. So a bit of a brick wall of resistance. We just broke through the trend line, but it's not confirmed. So generally with these trend line breakouts, you need to see at least structure on the other side of the trend line. We didn't quite get any structure. We just kind of tapped out and then just right back into that range. So showing signs of weakness here, essentially, is what that means. If we're lucky, we can kind of curve back out and get some kind of W on the other side. But if we start losing these lows, like on Bitcoin, then obviously we have to get much lower. The thing about ETH too is like we just kind of lightly tap the reload zone. We might have to come back even lower potentially and take at least the 78.6 area before we officially bottom. And you can also see where the last previous structure was. Realistically, that 88.6 level seems quite attractive to me, even more so than these reload zones, to be honest. But it's a bit of a way. And I think if that does start settling off into that area, then goodbye alts. That's all I can say. And yeah, I mean, even in the alt markets right now, you look at the stablecoin dominance, like it's we're bottoming out, double bottoms. It's breaking out to probably new highs here, it looks like. And then look at all the alt indexes are just free falling down. There's no bottom here. There's no bulls, unfortunately. It's just back to bears. And if you look across the alts, like everything's getting rinsed again. It tried to put in the bottom just like on Bitcoin and ETH for the last couple of weeks, but now we're pretty much losing those structures completely. And so, back down we go. I think we really are realistically coming back into all of these little tails that was left on October 10th. I think Binance was just foreshadowing where prices are, realistically having to head towards. And so you can already see like most of this tail is already starting to get eaten up. And we're not too far off from a lot of these prices actually hitting those bottoms there. So, it's not the best case for alts, unfortunately. And I've been getting stopped out on pretty much all my trades that we put on the last couple of weeks. So I'm pretty much mostly back in cash at this moment, besides a few positions that haven't hit yet. And then I'm not really looking to buy anything at the moment. I don't see any setups. Mostly just might have to just wait till the New Year's, honestly, at this point. But yeah.
Just what the people wanted to hear.
Yeah, I'm sorry, guys. Like, I was very bullish. I was bullish as fuck a couple of weeks ago. The market was trying to put in a bottom, but unfortunately, the sentiment is still pretty bad out there. I think, there's not enough liquidity for these markets to hold, and I think people are just done and tired, so they're just cashing out, and it's the way it goes sometimes, right? Live by the sword, die by the sword.
Well, but at the end of the day, that's I think that's more what people want to hear. They don't want to get smoke blown up their ass, right? They want to see the reality of what the technical analysis is saying. Coming out here and being, from a trader perspective, just being unrelentlessly bullish regardless of the charts doesn't help anybody. So
yeah. I mean, I try to just do setups. We had some setups, they got stopped out, and that just means the trade idea is invalidated, trend is not strong, and just have to reset and wait now. So yeah, that's kind of where I'm at right now. That's pretty much it for charts that I got for us today.
All right. Well, let me pull up a few stories here. Actually, I only got about 15 minutes, and I got a call I got to hop on. But we have a couple stories that we can cover. Like I said, lots of continued macro bullishness. That's not the right one. Here we go. Share this screen. There we go. Fed rates, obviously important. One of the biggest, going to be one of the biggest factors for 2026. After the last Fed meeting, Jay Powell, very, very bearish for January. A lot of people reflecting that on poly market. Only 21% saying they expect a rate cut. $100 on that can earn you almost 500. So I do think we're going to get. The more I read about stuff, I do think we are going to get a rate cut in January again. We're only a couple weeks out, about a month out. I think their meeting is again early second week of January. I do believe so. We are still seeing weak job numbers, regardless that, again, GDP numbers due to productivity is going up. Inflation is here or there, depending who you ask. But I do think we're going to get a rate cut. If we don't get a rate cut, it's going to be maybe that's the impetus for that Q1 dump leading to later 2026 pumps. But time will tell. I'm very tempted to take out a buy on this one. I think this is the one that could be a lock, though. I think the no bet on 2 rate cuts in 2026 is a no-brainer. Easy. So what? Throw $1,000 in there. You're gonna make. It's too many. Well, throw $1,000 in there, and yeah, you can make $1,100. Not bad. Or sorry, you're gonna make 26% there. Not a bad ROI for a year. Obviously, that's not what most DGens are looking for. DGens are looking for that 10-15x, but
100x.
You got a little, yeah. I mean, who's going to complain about making 26% a year, though?
I think crypto people are like, 30%.
Everyone, It sounds so arrogant, but it's true, man. Like I go back home, I talk to my dad, and he's managed his own portfolio in like retirement portfolio for the most part. He has some financial advisors as well, but he definitely has managed a big portion of his portfolio for years since I can remember as a kid. And he's got different guys he reads letters for and stuff. And especially early days when I was getting into crypto, he would share these. Oh, check this out, and I'd be like, Dad, after a while, I was like, I know this is going to sound arrogant, and please don't take it the wrong way, but like, I'm not going to read a 4-page document telling me how to make 8% a year. Like it doesn't excite me at all. Like I'm not going to get out of bed for that. Like it's like as irrational and fucking arrogant as that sounds, like that's not what Web3 investors are looking for. And that's probably why most of them are broke. But
yeah, because we're speculating like hardcore with leverage, right? Like, we're all trying to chase that 100x dream.
Chasing that dragon, baby.
Yeah, it's been a tough cycle, man. It's hard to get these 100x's.
No, it has been for sure. Well, a lot of stuff going on this week. October retail sales data, November jobs report comes out to yesterday. I didn't actually see those numbers. I'll have to check that out. CPI inflation is tomorrow. That'll be a very important one. PCE inflation on Friday. Home sales on Friday. We got a couple, big economic things coming in here. It'd be interesting to see how the poly market rates shift by the end of this week with that new economic data coming in here on this chart here. I imagine, depending on those numbers coming in, I'm going to guess we're going to see this 25 basis points pop up a little bit here. So if you want to get a bet in on that, you're going to want to do that now before
look at
that. There we go. That's 50 basis points. Although, what's crazy? So the 50 basis points last month was like under 1%. It's like under 0.5%.
Yeah.
People are more bullish on a 50 basis point cut for January than they were in December.
That's crazy.
That's pretty wild, but still, yeah, it's not a bad $6,150 little 61x there. I'll get the DGens excited.
Yeah, I mean, like the best way to play this, it's almost like you gotta like somehow hedge your bets here and just do a couple of different ones.
Well, yeah,
I like this one most. Like I think this one's realistic, 25 bips, and it's a 4.5 payout. That's not bad actually.
Yeah, what's only 30% on this? So yeah, I don't know if you can quite cover. I mean, if you just wanted to go for the long odds, throw 100 in each of them. That's $300. Even if you hit the no change, you're still gonna you have to, but yeah, you're not gonna break even there on that. But you can hedge a bit with it, I suppose. President Trump mentioning we brought in $18 trillion due to tariffs this year. Been getting a lot of flack for that. Obviously, a bit of a faux pas there. But the reality is that 18 trillion, it's between 18 and 22 trillion of economic commitment we've got from foreign countries. So that's not due to tariffs. It's foreign direct investment in the United States. So no, it was not tariffs, but that is still a massive, massive number. That's a massive amount of money being brought into the U.S. A lot of that getting dumped into AI, infrastructure, crypto, et cetera. I don't know what the timeline on that is. I would imagine it's over the next probably 5 to 10 years, but that is a massive amount of money coming into the U.S. for industries that are going to directly affect what we do here in crypto, AI, and financial industries, stable coins, et cetera. So, again, macro continues to look very, very nice. We're seeing rate cut coming in worldwide. Obviously, the U.S. already started cutting rates. England started cutting rates. But those are all expected to continue. The Bank of England set to cut rates 3.75 as economic data eases inflation. That's for this month. Bank of Japan as well just announced they are going to be cutting rates. Where is that story? Here we go. Yeah, Bank of Japan cutting rates will increase. Will increase interest rates. Not cut interest rate. They're going the other way.
Yeah, Japan market actually nuked the other day.
Yeah, Japan's finances are a little fucked. There's been lots of speculation of how that's going to affect the markets. Some other positive stuff here. Ukraine offers to drop the NATO membership demands. One of the things that Russia has been staunchest on in terms of coming to the table for peace agreements. We've said for months and months now, one of the biggest macro pieces to this picture to help give the market confidence that we're going to be able to move forward and move the world's economies in the right direction is getting it into this war. This war has obviously from a humanitarian perspective been absolutely devastating. We want to see peace for that perspective alone, but from an economic perspective as well, with all the different sanctions going on around the world, all the different issues that's caused in Europe with the U.S., with Russia, with Chinese relationships, this war ending. That will be a very confidence-inspiring event for the funds and the people out there that are making up that 132 or whatever it is trillion dollars sitting in M2 to want to move back into risk-on assets. So very, very positive, both for the humanitarian side of things as well as for economic markets there. So bullish on peace in Ukraine, praying for that to happen here soon for a number of
time. Holy fuck.
Yeah, it's insane that's still going on there.
Yeah.
What else here? Coinbase continues to just be uber bullish on the market. They've been acquiring companies left and right. They've just announced that Lighter has been added to its assets listing roadmap. Very bullish for PerpDex there. Very bullish for Mr. Andrew as well. Andrew, a big fan of Lighter.
Yes.
Coinbase also unveiling they're going to be launching their own prediction market. So they're throwing their hat in the ring there. Obviously, we covered last week Binance, CZ continuing on with his model, finding very profitable, very hot narratives and entering that space. But now another major competitor, Coinbase, stepping up and throwing their hat in that ring. How many is too many? At what point do we have, obviously this is one of the fastest growing markets out there with, Kalshi and Polymarket leading the pack there. But now with Binance and Coinbase in there, at what point do we have too many multi-billion? How many multi-billion-dollar prediction markets can we sustain currently, especially if we continue with an economic downtrend? Degens can't degen if they ain't got any cash.
Well, I think it's just going to be like every other trend that we've seen, right? Like, we see like hundreds of perp dexes right now. We've seen hundreds of launch pads. We've seen hundreds of like replicas of the same shit over and over. I think it's just going to happen no matter what. And then realistically, it's just going to be like probably 2 or 3 kind of like top players. And then it's just really kind of seeing like which one's going to be the one. Right?
Yeah.
Obviously, Polymarket's leading. Kalshi is like, just behind. It will be interesting to see how these exchanges are going to be, setting up their prediction market. And then how easy is they're going to like be able to like, push their clients to that side of business, right? If it's integrated into their exchange very like easily, very efficiently, then, that could be quite interesting.
Most definitely. But again, these hot narratives, as you mentioned, draw a lot of attention. We saw with, everything. Gamble.Fi was another great example where you can see.
Yeah, at one point or not, like we're probably going to see these guys all get hit with some kind of like gambling legislation or some shit. Cause like, like these prediction markets are pretty much a casino. Like,
yeah, most definitely. But cool. I love the tech. I hope it stays decentralized. I hope the government keeps their hands off of it. But the time will tell. What else we got? Some more bullish kind of macro stuff here. Western Union CEO announcing live on Bloomberg they are going to be getting into the crypto on-off ramp space. Obviously, Western Union been one of the biggest payment solutions, TradFi payment solutions since the coach and wagon days back in the Wild West. So very, very old school TradFi business. Great to see that adoption coming on board there. Payments are one of the hottest narratives right now. Working with a couple payments companies at the moment. So excited to see that industry within Web3 continue to grow and to expand. It's gonna be hard to onboard people if we don't have proper on and off ramps. So great to see a more traditional TradFi and one of these. The average person, if you're doing remittance and you got $100 you want to send back to Venezuela or wherever, like you're not opening up probably a Binance account and sending it. You might be using a service like a Western Union. So that seeing them being able to offer crypto now is a great advancement. Running out of time here, but I got one more bullish story, probably the most bullish macro story of the day here. Seen multiple people talking about this. The Bitcoin and Ethereum ETFs are projected. In fact, this year they already had the Ethereum ETFs. I think, and this here he mentions the numbers, but the Ethereum ETFs blew away the new supply of Ethereum coming into the market by a lot this year already, and they're projected to continue to do so to the amount people are predicting up to 5x buy side inflows demand on these Ethereum ETFs versus I think it's like 4 billion in Ethereum that's projected to be minted next year. New supply coming into the market. Bitcoin, same thing, not 5x, but the ETF inflows, buying demand for Bitcoin and Ethereum set to far outpace the new supply coming into the market. One question is it going to also outpace the sellers in 2026? But another very, very bullish catalyst lining up in the macro picture for a glorious return to the bull market in 2026. So I continue to remain positive. I don't know if or when during this next year I will flip bearish. I agree. I think most of what we're going to see is probably going to happen before the elections next year. I think that's a pretty good line in the sand to start looking at, making sure you got stuff off the table at that point. Obviously, we'll update those theories over the next 11 months here, 11, 12 months here. But a lot of positive stuff in the market. I remain hopeful despite the TA. If that changes, be announced here first and foremost.
Fingers crossed, bro. I'm trying to stay hopeful here.
Yeah. But yes, I got to pop to another call here. Appreciate everybody tuning in today. Give us a like, give us a subscribe, share with your friends. If you got any charts you want us to cover, leave them in the comments below, or you can comment live on any of these streams as well. If you're looking to get into M&A or OTC on the buy or sell side, hit us up via the website Acquire.Fi. We are the preliminary, one of the top Web3 M&A platforms. We're one of the largest OTC desks in the space. So happy to help out with either side, buy or sell there. Got a lot of great deals available at the moment as well. So yeah, looking forward to catching up again on Friday, following up with these stories, following up with the charts, seeing where we're headed as we go into the Christmas season, wrap up this year that has been absolutely wild. One for the record books. 2025 has been an interesting one. So yeah, until Friday, thanks for watching, and we'll see you all soon.
See you guys.